Yeah, Tuesday the 16th of January. Hope everybody had an absolutely amazing trading day. I want to welcome you to the daily market commentary. For those of you that are new to the channel, we do this every day where we take a look at some of the levels that moved in the markets for the day. We had a 3-day weekend, so hopefully everybody is relaxed and has come down and enjoyed a 3-day weekend, although it was an eventful 3-day weekend, wasn't it? I mean, between what happened in Hawaii and between the fact that my Steelers lost and my Pirates traded away all their players. But I'm not going to talk about that. I'm not angry. I've let it go. No, I haven't let it go. But anyway, we look at the same futures markets every day, and this 3-day weekend was an interesting one simply because we closed on Friday at an all-time high, and then futures opened up on Sunday and just kept on rolling, and then they kept on rolling on when they opened up Monday evening as well. After the holiday. So, but during most of the day today, they kind of came down. So let's go ahead and look at our markets. Now, remember that as we go through each of these markets, none of these trades that I've set up are designed to be recommendations at all. These are really just an educational example so that you can see how levels are affected over time and what they do. Now, the other thing to remember is we leave the lines on the charts. And the reason I leave the lines on the charts is so that you can see how levels are developed, how they're created, and really what comes of a pretty good and high probability area. So let's go ahead and dive in. Now, one of the things that I think it's important to do is to take a look at the Twitter feed that I have. If you don't follow me on Twitter, it's just at Chuck Fulkerson on Twitter. And we talk about why we would or would not take individual trades in individual levels. And this level in particular is one that we're going to talk about. So this area right here was identified. And we talked about this earlier in the week and said, well, this could be a potential, little bit of a zone. But the interesting thing is that as it arrived, and let's go to a 15-minute chart, as that level arrived and kind of came down into it, we started to just pop around and base before falling into it. Now that basing, remember that we're looking for fair price value areas. And I typically like areas of fair price below some support breakdowns. But when we hit that area, because we had this basing up above, it made it a lot weaker. So actually, I had a little conversation. We talked about 4 hourly down candles in a row on the ES. So when I had posted that tweet, what we had said is that we had 4 hourly down candles in a row. So what that meant was, looking at the hourly chart, we had 1, 2, 3, 4. Now, at the time I put that tweet, we were just coming into this zone, but notice upper wick, upper wick, upper wick. Now those upper wicks tell me that the buyers kept trying to come in, but like a dog that was getting smacked in the nose with a newspaper, they kept getting smacked down. And so they were unable, and by the way, not that you should smack a dog in the nose with a newspaper, but anyway, they were getting smacked down and unable to hold on to any momentum they were able to build. And that's what told me, hey, listen, I don't feel like this level's going to hold. So what I said is that it becomes a candle-to-candle style of trading from this point. And candle-to-candle style of trading, so we say here, candle-to-candle style is in effect here, meaning that we're only going to get long once I get higher than the previous candle's high. And if you notice, we just got that now on the reversal out of this area. And then really good question from DJ Little. He says, got in at I think he meant 27.90, stop at 29.83. Cut or write it up. And I said candle-to-candle style is better to fit on the 60-minute chart because that's what we want to do. So just keep an eye on the Twitter feed as a way kind of to keep updated. So now obviously this level is now dead to me, and we are not interested in it. Now if you look at this on a daily chart, what you see is that the red candle of today is a reversal candlestick. There's no doubt that is a reversal candlestick pattern. That pattern is actually called a spinning top. Right? That's a spinning top pattern where you have a fairly even-sized wicks and a body which is less than half the size of the wicks. That's a spinning top candle, which is a strong reversal pattern. That being said, I'm not short in this market. I'm not doing it. I don't tug on Superman's cape. I don't pull in the wind, and I'm not going to short off this daily time frame. I may be willing to short off the 15-minute chart. Now, off the very small time frame, I think it's worth taking a look at for a potential short. I will tell you, earlier today, I took a very small time frame short off of this area here and just caught a few points, as really it was almost more of a scalp off of this area here. And frankly, I took a few points and almost got smacked in the nose for my disobedience, as I've said, not to short those all-time highs. And we've come off of it just a little bit, so I don't really like to do the 5-minute charts very often. But on the 15, if you're inclined, there is a little opportunity right here. Now, I like this little opportunity here because we had this basing, drop, a little bit of a base, and then the very strong move away is what we got in the early afternoon. So I'm going to highlight this as a potential, but just know you've got to evaluate your own risk. We are taking more risk doing this simply because we've got a small time period, right? So I'm putting it in purple because we're finding a small time period, and we're right off that all-time high. So you do have a certain amount of risk you've got to be willing to absorb inside of there. Now, going back to really the 60-minute chart, I fully thought that there was a chance today we were going to make it down to 27.65. So I really felt like today there was a good possibility of making it all the way down to here. We didn't quite get there today, but I think that could still be a valid possibility. And I like it because it's old resistance, which can become new support. So keep this area in your noodle, if you will, going forward for a potential buy opportunity. Looking at the Nasdaq, now the Nasdaq didn't come anywhere near any of our levels. We still have a Nasdaq level way, way, way down here. And then as far as these other areas in the Nasdaq, I don't love them quite as much. If you decide that you want to look at a short in the Nasdaq similar to the one that we found in the S&P, it would be off of this area right here. But once again, evaluate your own risk tolerances. Crude oil today. Now, crude oil got a little bit of a sell-off. Off of that roughly $65 a barrel, 64.89 is really that high number, and we got a little bit of a sell-off in there, and we still have a good buying area, some nice support down here around 61. You could also get another little bite at the apple right here at 63, and again at 62. So each whole round number, if you will, you've got a fair amount of order imbalance. So keeping an eye on each of those whole round numbers. I'm going to leave both of them. I'm going to leave all of them off my charts for now, as I would like to see a slightly deeper pullback in oil before I get in. A slightly deeper pullback would actually be better for me and for what I'm looking for opportunities. Gold. So gold, solid gold. Interestingly enough, today we didn't get as big of a rally in gold as I would have expected. Typically, when you have a market fall as it did today, you're going to see gold, in this kind of an environment, take a big push higher. Now, we have rallied up into this fair price area here. However, we stayed in that area for a really long time, and I'm not a huge fan of it. So I'm gonna leave that one alone. Now, if I move to the daily chart of gold, we can see that we are coming to a prior pivot high right through here. This area here was a prior pivot high, which did also include a gap. So keep that in mind as we are indeed going forward. Looking at the bonds, bonds today, we still are. Some of you still may be in that short from the breakdown. We are actually setting up for a breakout long on the bonds above this area here. So remembering I do the breakouts using solid blue lines. So that area does indeed exist. I'm going to remove this one for now. But leave that 123.05 as a potential long in the bonds. And the reason for that is because we've hit it. And if we break through there, with any sort of momentum, and then that's going to get you a pretty decent shot. And remember that if you break above there, your stop goes below the last pivot underneath it. Next levels that we're going to look at would be in the Aussie. So looking here at our levels in the Aussie, So in the Aussie, we have on a daily time period, oops, wrong button, sorry about that. So on the daily time period, you see that we are continuing this strong march up, which is just, showing more weakness in the dollar overall. The Aussie has a whole lot of noise up above us that we are kind of coming into. I'm not in love with any of that noise above us. I like the noise below us. So looking at this on an hourly chart, in the Aussie, I like this area right here as really the best kind of opportunity. I don't like when it was created, but I do like that we have that old resistance here to the left. It's a little bit of a fair price area above a pivot low, and that fair price area above a pivot low is one of the things that I like to look for. In the euro, we've got a lot of similar shapes kind of coming in here. There is in the euro, once again, that same straight up parabolic move. Let me remove these lines here. Those are obviously no longer valid. So we've actually got to look on a weekly chart. We got to go back deeper in the euro to find anything for a potential reversal point. And we're kind of coming into that area now where there was a lot of sideways price action here. But I think that it can thrust through all of that. I don't see if that's going to be a humongous stopping point going forward. So, I'd be more apt to be looking to get long on a pullback to a good opportunity. And that's really just stemming from the weakness of the overall dollar. So stemming from the overall weakness of the dollar is what would drive me to get long the euro. So on a 4-hour time period, you have this area right in here. And that may be a bit wide for your risk tolerances. And if that's a bit wide, then you can certainly find an area in there on the hourly time period, because once again, we're here on the 4-hour chart. The Canadian dollar. We had a nice little short setup, and we blew right through it. So one of those days where we just got completely stopped out, blew right through that particular area. Did not work out. Do not collect $200. Do not pass go. And so that one, it was a stop out. Now, by the way, that had perfect form. Everything was the way we want it. And sometimes it's just not going to work out. And that's kind of what happened in this case. As is the case, by the way, in the Japanese yen. So on our Japanese yen level, and really these are all driven by the weakness in the dollar. In the Japanese yen level, we came into it, base, and then broke right through it. That level was unable to hold on to any of the gains that we'd had in the past. So kind of frustrating to see 2 losses on some of those. But when you're trading currencies that are all dollar denominated and the dollar goes through the level, then any of the currency trades that you have set up are also going to go through those levels because it's dollar denominated. So going forward, I don't really have anything in play. And we'll have to look. We'll probably look tomorrow for some better opportunities in play there. I'm gonna lick my wounds for a little bit at the moment and just kind of hold off for a bit. It's become folly to try to really try to short any of these currencies with the dollar just falling as it is. So I'm going to use some of these areas as potential long opportunities on decent pullbacks. So that being said, I hope everybody had a decent trading day. I will say this. We've had an unprecedented rally higher. And I'm just going to look at the SPY, right? Let's look at the SPY. So just looking at this, I'm going to remove all the drawings on the SPY. So looking at this, we see that the SPY is essentially in an angle of a move up that we haven't had in a really long time. And this is a weekly time period. So we're looking at the whole S&P 500. What I would hate people to do is to overreact to a decent pullback. Now, we've gone up so far, so fast, that I believe you've got to give a little bit more leeway than usual. So here's a monthly chart of the SPY. And looking at a monthly chart of the SPY, look at the angle that we've gone up for the last few months. And if I just look at this as, and I'm going to make this a nice wide line so everyone can see it very clearly. if I look at the angle at which we've moved up, and I look at that angle compared to other moves up in the S&P, right? I've duplicated that drawing just to show you the angle of the move up that we've had in the S&P. We haven't had an angle like this. We had one here in this area, in this region right there. But even back in the 2003 to 2008 market, we didn't have any angles that were as strong as this move up. No periods were quite as strong at the tail end of 99. Now, my point being is that if we get a pullback, the pullback, you don't want to have your stop too tight. And you know, if you've got your stops too tight, then you're gonna there's a chance you'll get stopped out on a pullback, even a 5%, 7%, heck, even at this point a 10% pullback in the S&P would not be a catastrophic event, right? When I look at the S&P, I'm looking really at a stop loss somewhere down below here. You know, that's about a 16%, 17% pullback, I think, from current price. And so just keep in mind that when you have straight up moves, you do have to be willing to give up more of that if you are truly embracing volatility as an investor. So just something to keep in mind. It's a little bit longer term, you know, but whenever I look at, you know, my anybody's accounts that I work with, any of the clients that I work with, it's all about protecting our capital, but it's also about being flexible enough to know that when the markets go straight up, we do have to give a little bit more leeway and put our stop losses a little further away from current price and be okay with that leeway. Whereas if the market's chopping along more sideways, you can tighten that stop up. I will tell you, in a perfect world for me, I would love to see the markets go sideways for 2 or 3 months and then go up, because that would allow me then to take my stop, you know, on these big pictures and move it then that much higher, right? So if we were to go sideways for a few months, it'd be great to really just lock in some of those moves. So just something to consider when you're looking at your kind of your big picture portfolio. If you've got somebody that might need help or needs anything in their retirement accounts, do me a favor, just shoot me an email or give me a call, chuck@iiefinancial.com. Hopefully we can do our best to help you out. So thanks so much, everybody, and I will see you real soon.